Ready to pass the CPA exam faster? Visit cpapass.ai. Today, confusing sufficiency and appropriateness? Master this audit distinction. Many CPA candidates fall into a classic examiner trap. They assume that gathering a mountain of client documents guarantees a passing audit file. But in professional auditing, simply collecting more low-quality evidence fails to satisfy professional standards. You cannot fix bad evidence by just getting more of it. To master this section of the AUD exam, you must understand the core distinction between sufficiency, which is the quantitative dimension of evidence, and appropriateness, which is the qualitative dimension. Let's break down how these two dimensions interact so you can easily spot the examiner's tricks on exam day. Sufficiency refers strictly to the quantity of audit evidence you must collect. Think of sufficiency like filling a bucket. There is no magic number of documents required. Instead, the size of the bucket you need to fill is determined by the risk of material misstatement. When an account has a higher risk of error or fraud, your bucket becomes much larger, meaning you must gather a greater quantity of evidence. Conversely, if you have exceptionally high quality evidence, each piece acts like a larger splash of water, filling your bucket faster and reducing the total quantity of evidence you need to collect. Appropriateness is all about the quality of your evidence, which we define using the formula appropriateness equals relevance plus reliability, or A equals R plus R. Relevance means the evidence must directly address the specific management assertion you are testing. If you are testing whether inventory exists, physically counting it is relevant, but a photo of the parking lot is not. Reliability means you can trust the source. Remember the door mnemonic. Evidence is more reliable when it is obtained directly by the auditor, from outside independent sources, consists of original documents, and comes from systems with robust internal controls. There is a direct inverse relationship between sufficiency and appropriateness. When your evidence quality goes up, the quantity you need to gather goes down. However, the golden rule of auditing is that no amount of low-quality evidence can ever substitute for high-quality evidence. You cannot fix bad evidence by simply gathering more of it. Visualizing this as a scale, a massive mountain of internal client copies can never balance out or equal the weight of a single direct external bank confirmation. On the CPA exam, watch out for options suggesting that sheer volume can compensate for a lack of reliability. Audit evidence is highly assertion-specific. For example, physically counting inventory is perfect for proving the existence assertion, but it tells you absolutely nothing about the rights and obligations assertion, meaning whether the client actually owns that inventory or if it is held on consignment. To test ownership, you must inspect purchase invoices instead. This brings us to the reliability hierarchy. Independent external evidence obtained directly by the auditor, like bank confirmations, always beats internal client documents. Furthermore, oral representations from management are the least reliable form of evidence and are never sufficient on their own to support an audit opinion. Yeah, let's walk through a practice scenario. If the assessed risk of material misstatement increases for a high-risk account, how should the auditor respond? The correct exam answer is that the auditor must increase the quantity of evidence gathered and obtain higher quality, more reliable evidence. Beware of examiner traps suggesting you can rely on management's verbal assurances or simply collect more internal photocopies. As you practice these concepts on cpapass.ai, always ask yourself two fundamental questions. Do I have enough evidence to satisfy sufficiency? And is it the right kind of evidence to satisfy appropriateness? Master this distinction and you will pass.